The world is crumbling, and so is the Australian property market. That's probably what you're thinking right now if you've been watching the news, listening to the media, and seeing everything that's going on in the world right now. We're seeing tariffs, we're seeing recession fears, we're seeing difficult economies, unemployment rates, AI. The world is a crazy place right now, and there's so many things going on. But let's take a deeper look at the Australian property market, what's actually happening in our backyard right now, and go into a bit more detail. Now, we cover all of this and so much more in our webinars, which I'll get back to at the end of this video. But right now, let's take a deeper dive and have a look about why the Australian property market is actually a unique opportunity, unlike any other opportunity worldwide. So, we have some of the best banking systems in the world. Uh, Australians actually want to own their home and own property. Now, this might actually be a hard concept for a lot of you to grasp, but not everyone everywhere around the world wants to own their home. Locations across Europe, Japan, they actually don't want home ownership. They're comfortable to be renting. Australians want to own property and they want to live in property that they own. Australia has one of the only markets in the world, by the US, with the equity release system, which allows you to build long term wealth and long term equity through property. But what does this mean for us under 25-year-olds, us young Australians that are looking and working so hard to break into the property market? Well, let's go back in time a little bit really quickly and look at what happens during the GFC. I'm sure most of us under the age of 25 don't know the GFC. We didn't really live through it. We were in school, our parents probably felt the great burden and grunt of the GFC without us noticing a lot of what was going on. But during the GFC, the stock market collapsed due to junk rental bonds in the stock market. The global market went into a panic. There was a frenzy. But the Australian market was relatively unaffected by September 2008. The RBA had dropped our interest rates by 0.5% for the first time in 7 years. They were on an upward trajectory, just like what we've seen over the last 5 years in Australia now. The Australian government bought out first home owner grants. They boosted the economy and property market absolutely exploded. Our interest rates dropped from 8% to 5.5%. And in the following months, the Australian property market exploded, but the Australian economy as a whole stabilized. Because when the Australian government wants to bail out the economy, they prop up our property market and bring in more people from overseas to save our economy. But let's actually have a look at this graph right here. So you'll see, looking back all the way in 2008, 2009, interest rates were sitting around 8%. They quickly dropped well below 5% once the Australian government decided that they were going to go all in on the property market. And look what happened to the property market over the next 10 years. Property prices almost doubled in that 10-year period. So what can we learn from the GFC? Property is a safe haven during market uncertainty. The government introduces incentives whenever the global markets are uncertain to save the Australian economy and to prop up the Australian property market. The RBA lowers cash rate to encourage property purchases. Banks lower their interest rates following the RBA cuts. Lower rates mean higher borrowing power, and investors target affordable properties. Now, we're going to go cover these really quickly in a bit more detail. But first, let's have a look at what's going on right now in the economy today and how it's an exact clone of what we saw in 2008 during the GFC. Over the last couple of weeks, Trump has announced his tariffs worldwide. There's a worldwide trade war and resource shortage. This has sent the stock market into turmoil. The Australian dollar is devalued and down. Stocks are down over 25%. Most people's superannuation portfolios are down over 30% right now. The RBA is tipped to drop rates by 0.5% by May 20th, and both political parties have first home buyer incentives, first home hire grants in the upcoming federal election. Major banks are predicted to drop rates by up to 3% within the next 6 months. So, what happens if interest rates drop to 3% over the next 6 months? Right now, with interest rates at 6.5%, your maximum borrowing capacity, if you're a 25-year-old on a fairly average income, is somewhere around the $370,000 to $420,000 mark. But if interest rates drop to 3%, your borrowing capacity goes up by 57%. That means you could be borrowing up to $600,000 to $650,000 if you're on a fairly average income for a 25-year-old. With interest rates at 3% and a $600,000 to a $650,000 borrowing capacity, there are properties right across Australia, but we've got key markets and key insights where you can purchase four-bedroom houses, not apartments, four-bedroom houses, townhouses, or house and land packages for between $550,000 to $650,000, meaning any average 25-year-old earning an average income for a 25-year-old can purchase a property. Now, what do you think will happen if interest rates drop to 3%? Traditionally, property prices go up as interest rates come down. But what does this mean for you? And what does it mean you should actually be doing right now? Well, if interest rates drop and people's borrowing capacity go up by 57%, investors are going to snap up this cheap investor grade stock. These are great opportunities. And as the property market continues to grow and go up, these are great entry level opportunities that everyday investors are going to snap up in hordes as soon as their borrowing capacity goes up by 57%. So if you want to beat the investors, if you want to beat the price hikes, and you want to get into the market as soon as possible, you need to take action today before the interest rates come into effect, before people's borrowing capacity starts to skyrocket. Take action and have a chat with our team. Now, if you still aren't sure, if you have questions, we run a free online live webinar that you can attend to find out more. You click the link in the bio, click this video if it's an ad, click in the comment section, find our link, and you go to the website on the left. Once you get there, fill out your details and register for our free live session, which you can attend, where we will unpack all of the details, every single step you need to know about what's going on in the property market right now across Australia. You can ask any questions you might have if you're uncertain, if you didn't understand something from this video. Our team will go through and answer every question asked on that live. So don't miss out. Book now.